Hi, this is Michael Regan with the Regan Team Home Loan Group, and here's your weekly real estate roundup for March 5th, 2026. If we look at the Case-Shiller Home Price Index for 2025 nationally, we had 1.3% appreciation. When we look at the Case-Shiller National Price Index and we look at it on a month-to-month basis, you'll see that from March of 2025 through July of 2025, prices actually went down a little bit. The rest of the months, they were up. When we look at the reason why home appreciation stalled, it's because rates were in the high sixes to low sevens. That impacted affordability, it slowed down the market, and so you saw a drop in home prices across the board just during those months. What happened after July and the reason prices went up? It's because interest rates started to go down, and so the demand increased significantly, driving home prices up. In fact, over the past 3 months, home appreciation annualized is up 5.3%. What this chart really shows us is that while home prices softened during the high interest rate times, that's when you want to buy. Because if you wait to buy when interest rates drop, well, home prices have already gone up or are going up. You want to buy when home prices are steady or declining when interest rates are higher, because then again, when rates drop down, you get to benefit from all that appreciation. And of course, you can just rewrite your home loan if it makes the most sense. So waiting for interest rates to drop is not the best strategy and actually costs you a lot of money. Then into the ADP private jobs report for the month of February, it's anticipated about 50,000 jobs being created, came in at 63,000 jobs. So not a crazy job number, but nonetheless a little bit more than market expectations. Now, just to realize, not that long ago, if we had 150 to 200,000 jobs created a month, that was a normal report. So having a report where the market is anticipating 50,000 jobs created just shows how rough our economy is in terms of job creation. Now, you did see that medium-sized businesses actually lost employees. Large only were up 10K. A lot of them were up in the small and medium-sized business, really in the education and healthcare market. Outside of that, you saw job losses across most industries. The recent conflict in Iran has had a major impact on the mortgage market. So now we head to the chart. So we're down 23 basis points in the Fannie Mae 30-year fix right now. And if you look at the chart, red is bad for rates, green is good. So obviously when the conflict in Iran started, rates have gotten significantly worse. Now, traditionally, in the past, when there has been any kind of conflict, there's been a flight to safety. We are not seeing that this time. And in fact, rates have gotten worse. What that also means is we have a ton of volatility because one piece of news can move the market one way or another. Right now, with this increased volatility, it's not a great time to float your loan. If you get into contract on a purchase or you're looking to refinance, the best strategy right now is just to lock your loan and move forward and don't worry about the intraday volatility. Well, rates have gone up. It's still a great time to buy a house, and rates are still at the lowest levels they've been in quite some time. And if you bought your house in the last couple of years, you really should be looking at rewriting your home loan. That's it for this week's update. And don't forget, we specialize in reverse mortgages and cash flow loans for self-employed business owners. Have a great week.